In the world of animation, cancelled projects are not uncommon. However, the recent revelation of Disney's $34.7 million expenditure on a scrapped Pixar spin-off has sent ripples through the industry. The film, tentatively titled, was intended to be the third installment in the franchise, a spin-off of Pixar's beloved series. The project was already well into development when the plug was pulled, leaving many to wonder how such a significant sum could be invested in a film that never saw the light of day. The story of X Cancellation is a tale of shifting industry landscapes, changing audience preferences, and the high-stakes gamble of franchise filmmaking. The initial film, released in 2013, was not a Pixar production in the traditional sense. It was developed by Disney Toon Studios, a division of Walt Disney Animation Studios known for producing direct-to-video sequels and spin-offs of popular Disney and Pixar properties. While received a lukewarm critical reception, it was a box office success, grossing over $239 million worldwide. This financial triumph paved the way for a sequel in 2014. However, the sequel's performance was less impressive, casting a shadow of doubt over the future of the franchise. Despite the dwindling returns, Disney remained optimistic about the potential of shifting the production from Disney Toon Studios to Grand Central Productions, a Disney subsidiary based in the UK. To understand the trajectory of, it's essential to delve into the history of Disney Toon Studios. Established in 1990, the studio was initially tasked with creating animated television series based on popular Disney films. Over time, Disney Toon Studios became synonymous with direct-to-video sequels, capitalizing on the home entertainment boom of the 1990s and early 2000s. These sequels, often produced on smaller budgets than their theatrical counterparts, were reliable moneymakers for Disney, satisfying the demand for more adventures with beloved characters. However, the rise of streaming services and the decline in physical media sales drastically altered the landscape of home entertainment. Disney Toon Studios found itself struggling to stay afloat in a rapidly changing market. The studio's reliance on the direct-to-video model, once a strength, became a liability. The declining profitability of these sequels, coupled with Disney's strategic shift towards theatrical releases and streaming content, ultimately led to the studio's closure in 2018. The closure of Disney Toon Studios marked the end of an era for Disney animation, signaling a move away from the direct-to-video market that had once been so lucrative. This shift in strategy had significant implications for projects like, which was caught in the crosshairs of a changing industry. The $34.7 million spent on might seem modest compared to the astronomical budgets of blockbuster animated films, but it represents a significant investment for a project that never reached completion. This figure encompasses various pre-production costs, including storyboarding, character design, animation tests, and voice recording sessions. Furthermore, the production's relocation to Grand Central Productions in the UK was likely motivated by financial incentives offered by the UK government's film tax relief programme. This programme allows production companies to claim back a portion of their qualifying UK expenditures, making the UK an attractive location for international film and television productions. According to reports, Disney received a £4.9 million, approximately $6.5 million tax reimbursement for. While this reimbursement offsets some of the production costs, it still leaves Disney with a net loss of $28.2 million. To put this figure into perspective, the net cost surpasses the £19.1 million budget of the Oscar-winning animated film 2005. The financial fallout underscores the inherent risks associated with film production, particularly in an industry undergoing rapid transformation. Even with meticulous planning and financial incentives, unforeseen circumstances can lead to costly cancellations. Disney has remained tight-lipped about the cancellation, declining to comment on the financial implications or the reasons behind the decision. This silence is not unusual for Disney, which is notoriously private about its internal affairs. Despite the setback Disney has demonstrated a continued interest in expanding the universe. The 2022 Disney Plus series, a 9-part adventure following Lightning McQueen and Mater on a cross-country road trip, received critical acclaim and was a hit with audiences. The success suggests that there is still life in the franchise even without the spin-off. Disney's strategy seems to be focused on developing spin-off content for its streaming platform, capitalizing on the popularity of established franchises to attract subscribers. The cancellation serves as a reminder of the volatile nature of the entertainment industry, where even projects with significant financial backing can be grounded before they ever take flight. However, Disney's willingness to invest in the franchise through projects like indicates that the studio is still exploring new avenues for these beloved characters.